Sydney. We're delighted to host today's event, and obviously from the applause that you gave the Minister as he came in, you're delighted to be here as well. It's an absolute privilege to welcome Trade Minister Andrew Robb, who's arguably the star performer of the coalition government after delivering a trifecta of free trade agreements this year. Since the election back in September last year, he spent 156 nights abroad. That's about a third of his time on his numerous overseas visits to clinch the deals with Japan, South Korea, and then the deal announced this week with China. Next on the government's agenda, an FTA with India. So you can obviously look forward to a few more nights away from home. I've lost count of the number of heads of state we have currently buzzing around Sydney and elsewhere in the country, as far afield as Tasmania. So it's such a busy time. We're delighted the Trade Minister has taken time to address us today. Trade Minister Andrew Robb.
Well, thank you very much, Ed, and good morning, ladies and gentlemen, and thank you for your interest in what I think is it is a very significant development, I hope, for the country, and I do appreciate this opportunity that Bloomberg has provided to report to a distinguished audience and to respond subsequently to some questions. I will focus my comments initially on the free trade agreement with China and some reference to the other two. When we go to questions, if you want to ask me about India or anything for that matter, as long as you keep away from Melbourne Football Club and things like that, I get depressed with that sort of reference. I do feel that probably most of you, if not everyone, would have a fairly strong understanding of a lot of the detail. There's packs here today, it's in very user-friendly form, but I would assume, I wanted to assume for the purposes of today's presentation, that the sort of line-by-line description of what was agreed is fairly well out there, and you've got access to it. We can refer to it in questions if you want to get into any of that detail, but I thought that I wouldn't repeat all that. We've had quite a lot of wide coverage. But rather, I do intend to comment this morning on some of the drivers of the approach taken by China and ourselves. What were the things that I think both of us were keen to achieve in the outcome? And then we can make your own assessment of whether that's been achieved or will be achieved once this thing takes effect. I thought just to present an overview assessment in 2 or 3 paragraphs that I couldn't do any better than Jennifer Westacott in her first public comments after the Business Council reviewed the document. And Jennifer said, and I quote, "This historic agreement is a transformative moment for the Australian economy. It puts many of our most important sectors on a more competitive footing internationally and gives Australian companies enormous scope to boost trade and create jobs. The agreement opens up an unprecedented level of access for our key sectors into Chinese markets and builds on Australia's existing strengths and opens new avenues for growth and job creation. There is a major access for dairy and beef products, sheep meats. Tariffs on our resources exports have been wound back, and new opportunities have been opened up to maximise Australia's comparative advantages in high-tech manufacturing and in services, which is 80% of the Australian economy." End of quote. And Jennifer has really touched on, I think, from my perspective, the key elements that I set out to achieve. It wasn't just, as was often the focus, on agriculture. That's very important because of the opportunities that are coming down the pipeline. And it wasn't just about resources, though there are some very significant improvements in the resources sector, but it was very heavily associated with services, where I think, with currently 80% of our GDP coming from services, 15% of our exports. And to me, in a structural sense, that is where the future is. Foundations in traditional products, resources and energy and agriculture, but the growth, a lot of the key growth will, I think, come about because of the extraordinary service offering we've got. Literally hundreds of services across the economy that are in demand in China and so many parts of the region. From the Australian drivers, just let me paint a picture of what sort of broad strategic drivers that we had in pursuing not only this free trade agreement but the other two that have been completed this year. It has been our determination since taking office to drive economic growth through private sector investment and to replace what has been a key driver outside of resources, energy, government spending of increasingly borrowed money. And that is not just an Australian phenomenon. If you look around the Western world, the developed world at least, ever since the global financial crisis, the instinctive response, and I think the appropriate one, was to seek to restore liquidity and confidence, and government spent money to stabilise things. The trouble was most of the developed world have not weaned themselves off that public policy response. It has dominated so much of what's happening in terms of attempts to drive growth, and we're now seeing the consequence with Europe. I think many parts are heading back into recession and a real drag on so much of the world. The US, fortunately, have discovered in the meantime cheap energy, and thank God for that. I think we'd be globally in a very bad state if the US wasn't underpinned by that extraordinary development over the last 4 or 5 years. So we have, in a very determined way, as a government, sought to do what we can to slow the growth of government spending. Not to cut it off and stop it, but to slow the growth so that we can live within our means. And, you know, I'm seeing with my investment hat on, and I go around the world, I'm finding that the world is awash with cash, and it's cheap. But the investors are not interested in investing. In fact, many of them are prepared to put $50 million into a European bank that would have to be saved no matter what, with negative interest rates. So they're prepared to lose guaranteed loss of a couple of million of their capital so that they don't risk 50 million in investments. And then the investors do understand that all of this strength of share markets has really been driven by borrowed money being spent by governments. And there is a sense that it could be a house of cards. And that's why I think there's such reluctance to invest, and that's why economic growth is not coming back the way it should, and certainly not the levels that will reduce unemployment around the developed world. Now, those sorts of notions are behind. We are determined as a government to seek to drive growth through private investment spending. We are blessed in Australia with a reputation for stability politically and for stability economically compared with many other parts of the world, and that is true, and it does provide us with an opportunity, a window, I think, where we can capture so much of that money if we've got projects here, and if we do set ourselves up in a way which encourages foreign investment over the next 5 to 10 years. So if you are to replace government spending and get private sector activity, it explains a lot of the initiatives, such as getting costs down on our side. So the carbon tax, the climate tax, our big assault on regulation, trying to narrow dramatically the approval times for big projects, the labour market reform, which is in the pipeline, ending corporate welfare, trying to re-establish a culture of personal and corporate responsibility across the community, a cultural initiative that we've got. All of those things are part of our agenda, but externally it has led to a much greater emphasis on trade and investment, foreign investment. And this explains the urgency that we have attached over the first 14 months of government to seeing comprehensive free trade agreements being struck with our key regional markets, Korea, Japan, and finally China. It also explains the 44 investment roundtables that I've held now in 17 countries over the last 12 months. As Australia's first ever investment minister, I've got trade and investment, and that's on top of the traditional trade responsibilities. But from where I sit, it's two sides of the same coin. Wherever you see a strong trading relationship, history shows you get a strong investment relationship following. And it's very, very important, the two arms, the trade and the foreign investment. We have been a country historically for 200 years that's relied very, very much on foreign investment. We've still got thin capital markets. The imperative is still the same today as it was nearly 200 years ago to drive a lot of the essential infrastructure, both publicly and privately, from private investment contributions. So that's really the motivation we've had. That's a broad driver, if you like, to see if we can, in a way, encourage trade investment through trade agreements and other means, of course, a lot of personal and direct contact, but through trade agreements, and to make our economy an attractive one to foreign investors, and to make our businesses more competitive so that they can trade in a competitive way and take advantage of free trade agreements. So it's a package approach to trying to drive private sector activity and jobs. From China's perspective, after 12 months, now 14 months of going backwards and forwards and meeting my counterpart at other forums around the world for negotiations, I feel that there appear to be 3 or 4 key drivers that I've observed which led to the agreement. And it is by far the most comprehensive and ambitious agreement that China has struck with any country in the developed world. And I think you've got to see it in the context of the last 20 centuries. Because for 18 of the 20 centuries, China was the biggest economy in the world and India was the second. The last 200 years are an exception to the last 2,000 years around the world. And of course, both those countries, very proud nations, as they should be, about their thousands of years of sophisticated communities in many respects, major civilizations. And a lot of that, you see the desire amongst the legitimate and not unexpected desire to re-establish their former prominence in the world, because they are still, certainly in numbers of people, by far the 2 biggest countries in the world, and they are seeking to drive this historical positioning in world affairs. So my observation after 12 months or more of intense contact and negotiation has meant that the government, I see the Chinese government, that they've come to realise that the re-emergence of China as a superpower requires, in my view, 3 or 4 things that they've come to judge. Now, there's endless, examination of the motives of China and other countries when they make reforms and do things. They really mean it. They're going to stick to their word. I suppose really what I'm putting to you, and I will now, are things that I've come to conclude that they see as imperatives if they are to restore their former glory and get back to that position where they can give to their whole population the sort of living standards that countries like Australia enjoy, everyone, or most people in our country enjoy, and the safety nets that exist in other countries. that's a very legitimate objective. And it's not a question of them being pressured. I see that so much of the points I'm going to go through are things that they have come to the conclusion are necessary for them to take. It's in their self-interest. And I think Paul Keating famously said years ago, you know, put your money on the horse named personal interest or self-interest is the fastest horse in the race, and that's human nature. It's human nature. You don't expect them to do it out of the goodness of their heart, or that we would do anything in an agreement like this. There's got to be mutual respect, mutual benefits, but it is all driven by self-interest. And I try to, as a negotiator, put myself in the shoes of those that I'm negotiating with. What is their self-interest, so that that can help shape the way in which I might frame what we've got to offer. And I thought first and foremost, they've got an absolute imperative, which you only have to travel around the country a fair bit like I have, to meet the reasonable expectations of their fellow citizens. Now, they've got nearly 1.4 billion. Over the last 15 or 20 years, they have, through their opening up and their market economy, they have really brought close to 500 million people out of poverty. It is a humanitarian miracle which overshadows by thousands of times the efforts of all the developed world for decades through aid programs and things to bring people out of poverty around the world. They've removed 500 million, but the problem they've got is there's still some 700 million who are subsistence farmers. And the difference between now and in the past in many countries is that those 700 million farmers have got a mobile phone. They are connected. They know, they've got a fair idea of what a lot of their fellow citizens, another 500 to 600 million of them, have got, the lifestyle they've got. And they've got expectations to share in that. And it explained a lot of the problems a couple of years ago in the Middle East. The same phenomena. Young people there started to realise what they didn't have compared with young people in developed countries. And I can see it in the political pressure of 700 million people. If they don't feel that every effort's being made and they don't see progress continuing, and there are millions of them every month going into the cities now, they're still going in by the millions every month. There is a real political imperative if the government wants to maintain a stable and peaceful, harmonious community. They've got a real imperative to keep their growth going at a significant level and to ultimately to provide opportunities and jobs and quality of life to all of their citizens. The second thing they have concluded from my observation is that unless they install the institutional structures and rules-based economies that characterise the developed world, then they won't succeed. They will fall short dramatically of their potential if they don't install these institutions and rules. Things such as sophisticated financial markets. If you have a look at the document, many of you are in the financial sector, I suspect, it's replete with all sorts of advancements across financial services, which are grossly unexpected, I think, but it demonstrates that they can see they don't do these things and they don't open up to the world, they've got problems and they're not going to realise their potential. They're not going to satisfy those nearly 1.4 billion citizens. They want effective, and they must have effective anti-corruption mechanisms. Again, President Xi, that's one of his primary objectives. It has really shaken up China, and you no longer get 14-course banquets. You get an 8-course banquet. You know, the quality of the wine has sort of come down a little bit, and quite a lot actually. But I've seen a public range for the whole 12 months. But all of these, they're symptoms of There's a real effect. There's a real effect, and it's trying to change the culture and the practice, especially at the provincial levels, of a lot of the corruption. A lot of you go to lots of cities, and people say, "Oh, the 9 people who have been running this show for the last few years, they're all in jail," and it's having a profound effect all the way down the line. But they have to remove it, because who's going to invest in China? All of the investment opportunities that have been opened up with this agreement, who's going to take them up if they think that they're going to be confronted with corruption, at every step of the way, and even once they're fully established? The third thing, or the third part of that institutional structure or rules, the reliable and understood and independent legal system, international governance standards, transparency, the sorts of things that I think they will establish very much for the Asia Investment Bank that they're proposing. It's a great initiative, very important. I see them looking to provide leadership with this, to provide the sort of role that an increasingly wealthy superpower in the region should be doing in sharing the wealth, in sharing the opportunity as a good neighbour. And we have said we will join with our ears pinned back as soon as those governance requirements, half of which they have met already, but once we get the others in place, we will join the bank, and with enthusiasm, and we will encourage Japan and the United States to follow suit. They need democratic processes. They need very democratic processes. They need strong cultural sectors, and of course open markets and rules-based trade investment, which is very much a part of the agreement. The democratic processes, President Xi said on Monday in the Parliament a very profound comment that by 2050 you can expect China to be fully democratic. Maybe still with a different political system, but with a very democratic system is his prophecy at least. But they do see they've got to move to that if they are to remove the corruption and all the rest. So much of this is obviously still a work in progress, but these things I think appear to be understood, and I felt reflected in President Xi Jinping's most powerful speech to the Australian Parliament on Monday. The third thing, the third of the fourth, is to become predominantly a service-based economy. Now, if they are to do the first objective, and that is to meet the expectations of their population, they need to continue the transition from an investment, manufacturing, export-intensive model of growth to a consumption and service-based economy, because that's where the jobs are. It's in the services. And with a rapidly urbanising economy and a continuing urbanising economy, they're going to have to, only 52% of their GDP is currently services. It's just jumped over the 50% mark for the first time in modern history. We're at 80%. A lot of developed countries are closer to the 80% than they are to 50%. Because that's where the jobs are. If they're going to absorb many of those 700 million, they've got to create the jobs. And their services, it's services everywhere. The one thing that has been raised with me most in all of my trips, not just in China but throughout the region, in all of the developing countries, the one thing that keeps being asked of me is queries about the availability of Australian services, and in so many areas, dozens and dozens of different types of services. It's not just financial and legal, the sort of typical things. It is aged care services. It is health, all sorts of health services. Blood testing. You think of all the sort of myriad of things that go to the health sector. They ask about it. Design, architecture, engineering, water management. 20% of the world's population is in China, 7% of the world's water, and most of it's polluted. We've got an enormous opportunity because of our skill set to contribute to fixing that problem over the next few decades with the Chinese, contributing to their growth. And they see it. They want these sorts of skills now. And that's why, the nervousness through much of the negotiation for most of the time, or for the first 6 or 8 months, they would say to me, and I'd be saying, we've got to open up services. We've got something that will benefit us if we get the services in, but it will benefit you because you need to come up in your services capabilities, and we can help. Because we're a knowledge-based economy and we're seen as such throughout the region, highly knowledge-based economy. And they kept saying, but we would have to give this to much bigger countries, these services. And I said, in the end, I said, think of us as a special economic zone. They love their special economic. It's been a very effective tool of public policy in China, both to test things but also to get acceptance amongst the population of certain changes. So think of us as a special economic zone. We're not big enough to swamp China with services. And if it doesn't work in some areas, you can say to others, they are a special economic zone. We're not giving it to you, but we'll do the things that do work. And I don't know whether that was the conclusive, but in the last 2 months, the services door just opened. And this agreement, I think, is rich, highly rich. You'll be able to, once this takes effect in 4 or 5 months, if you're in aged care, you'll be able to walk in the next day and open up an aged care facility, or 100 if you want to. If you're running private hospitals here, you'll be able to walk in and open up a private hospital and own 100% like the aged care facility, or the several. If you're running restaurants, if you're running hotels, same thing, 100% ownership. So when people say, you know, they can buy things here, but you can't buy things there, that is changing, and this document changes that. Right? And so it does prove to me it's in their self-interest. They know that the best way to get those services and that IP and that expertise and that skill set and to train their people is to bring in significant numbers of people who do know what they're doing, who've had a career in those sorts of areas. Across the financial services are so many things, that financial services area, and there I can tell it's just a start. They are looking to significantly open up. So I think the services side is very significant. The fourth and final area I thought was the need to be strong, obviously, if you're and resolute in terms of the direction you're going, but not threatening. A good regional neighbour. Now, the comments of President Xi on Monday, I think, had enormous weight to that. He made some absolutely unambiguous, quite definitive statements, and if that holds true, it is a wonderful thing, if that is the objective. And he did say, as he put it on Monday, that they intend to do unto others as they would want done unto them. Now, that is the sort of benchmark that I think we need for a country that's emerging like it is. So I think it's those 4 objectives that I felt, once I understood them, we were able to use those objectives, as I said, with the special economic zone example and other things, to encourage them to see the benefit of Australia. And I think the other thing was that my sense through it all was that they were looking to send a very powerful signal to the rest of the developed world in particular, that they're ready and able to engage in a 21st century open way with the developed world. And it was, I think, easier to do it with a smaller economy. But we are very export focused, big agricultural export and resources. But I think it was obviously easier than doing something with the EU or the United States. But they were able, I think, through this, I do feel that they've achieved that objective of sending a powerful signal. A lot of these provisions, some of the developed world would choke on trying to make some of the concessions that we've received. Finally, could I just reflect briefly on the power of the combined 3 free trade agreements. Having the 3 and having them done quickly and negotiated by basically the same team, with myself and my departmental colleagues who did an extraordinary job in all this. The expertise has been a great source of comfort and benefit to me. Some of them have been, nearly needing counselling because they've been involved with these things for so long. China was 10 years the longest, but the others were also nearly that long. But they brought all experience and late hours to bear. But the thing is, across the three, I was in a position, including with the TPP, which is coming up and is not far off conclusion, I suspect, I was able to look at, well, I can get those things in Korea because of all sorts of reasons, and I'll look after other sectors in Japan, and I can also, with China, balance the mix of the benefits and opportunities, conditioned by the different political sensitivities in each of those three countries. And again, with TPP, I can do it again, but it just gives me as a negotiator more flexibility. I mean, the dairy industry didn't get much out of Korea, but I knew all along that China was where the big opportunity was, and that I had reasonable prospects of, and it's a killer deal for the dairy industry. It set the dairy industry up for decades, according to the leadership of the dairy industry. And the opportunities are just phenomenal. This will encourage a lot of investment into the sector, into the processing, the logistics, the consolidation, and we need all that. We need the innovation, because if we're a high-cost country, and if we are going to compete in all these areas, we've got to be up to the premium end of all these markets. So we were able to also, with the leaders, to leverage our strengths. One very clear decision we took at the outset was that we're not going to be in there protecting our weaknesses. If we've got this growth of imperative, like you do with your own skills, if you're smart, you maximise what God-given talent you've got. With any business I've run or been worked with, no one in the organisation steps outside of the brand of the organisation, contradicts it. And that's basically the strengths of the business. They're leveraging their strengths. Sure, trying to grow them, but always protecting those strengths. And it's the same way with the countries. We've got fundamental areas that we've got a comparative advantage for all sorts of reasons. And the idea was to protect and grow those strengths and not spend a lot of political capital and a lot of finance and a lot of taxpayers' money on protecting weaknesses, things that others could do well. So these agreements, taken as a total, in large part reflects the strengths of Korea and Japan and China and the strengths of Australia. And we have sought in negotiating to focus on advancing those strengths and not focusing on the weaknesses. The second thing, it has established a trading advantage. This is the first substantial agreement with most economies. So when you've got a growing market, one of the objectives from a business point of view, you try and grab as much market share as you can get. So when the competition comes in, you've got an established position. You've got knowledge, you've got relationships, you've got trust that's been established. You've got a serious, amount of market share, and then you focus on staying competitive and innovative and all the rest. This is giving us an opportunity in a whole lot of market areas to get first mover advantage almost in a growing market. There's 600 million people in the region, in the middle class, from India all the way through to China and everything in between. That's going to grow over the next 30 years, not 100 years, the next 30 years to 3 billion. The growth is, and it's phenomenal now, it's happening now. We've got to be in there. 2 years ago we sold 60,000 tonnes of beef to China. Last year we sold 260,000 tonnes of beef to China. They went from 12th to 3rd in our market in 1 year. It's happening, and many of you could cite many other examples. And we've got to be in there, and we've got to be in there in an aggressive way. And these agreements give us that opportunity. Removing a trade disadvantage there was some smaller countries, Chile, Switzerland and New Zealand, who had struck agreements. New Zealand had really hurt us in dairy because 4 years ago they struck an agreement. And it was a good agreement. We've got a New Zealand equivalent, and in dairy, a New Zealand plus equivalent. So we're still 4 years behind, because a lot of these things are graduated reductions to elimination. So much of this, nearly all of this, is elimination of tariffs. The third thing is it removes the three of them together. As I said, I'm repeating, there are different benefits across all sectors, the sharing of benefits. So you win some here and you don't win so much at the next. The fifth thing is it has created an opportunity for increased investment dollars. The investment provisions, and there's all sorts of things, including a provision which has not got any publicity for probably obvious reasons, because it's not relevant to most of the punters, but there is a provision, the most favoured nation provision in the investment area, that whatever concessions that China gives on the investment front to any other nation in the future come to us at the same time. Now, at the moment, China, the investment chapter is smaller than normal because China is currently negotiating an investment treaty with the United States. And this will be, the most advanced agreement. All of the benefits that we currently haven't got that they conclude will come to us at the same time, including anything they do in the future with other countries. So that's a huge thing. But also there's competition I can see coming already. I've observed competition coming for projects. As I said at the outset, the world's awash with cash. It's cheap money, but investors are really sus about going into countries. Australia is AAA rated, all the stability. We are seen as a safe haven, but they want projects. And with this asset recycling, it has set them alight. A lot of the people I've been in touch with in New York, and Zurich, and UK, and other places. The money is starting to line up. It is lining up in Japan. All of the relationships, the intangibles that come with negotiating one of these agreements, and the efforts of the Prime Minister and the other leaders, and the focus they bring on it, has very materially influenced the attitudes and trust between our countries. And you're seeing, and Japan I can see are lining up to make sure they don't lose out on projects down here. And also, finally, they're all lining up to see that they don't miss out on the premium products. You get China going from 60,000 tonnes of prime beef to 260,000 tonnes, there's a limit to how much we've got, and someone's going to miss out in due course. So these sorts of agreements, which are giving advantages to our industries, are also creating a sense of competition between those three. Could I just finish and give the last word, if I might, to Kevin Rudd? As you would. Kevin said on the BBC overnight, he said it's the easiest thing in the world to run fear agendas against free trade agreements. He said if you look at the whole package, on the trade side, the investment side, I think this is genuinely win-win for both sides, end of quote. Now, I appreciate his assessment of the assessments and agree with it, of the benefits. But I just say already there's attempts by the ACTU and our opponents to, you can hear, I just think I heard it then, the dog whistle. There's dog whistling starting to go on while Bill Shorten was gushing in the chamber to President Xi. His spin doctors were upstairs in the gallery doing a lot of already sort of dog whistling about the investment and the movement of skilled labour. And well, I just want to clarify some of this because we can't have an agreement of such consequence sullied and misrepresented. The fact of the matter is we are very conscious that we've got unemployment levels over 6% and that we've got to look after Australian workers first and foremost. I do make the point though that no Australian job is threatened if there's no project. Okay. Secondly, the provisions that we put in there, there's a new name to a provision we got, which was the investment facilitation arrangement. But it really was just taking out of the existing 457 arrangements and the enterprise migration agreements, which were actually brought into effect by the Labor Party, the Maori office, which allowed enterprise by enterprise a separate negotiation if there was a skill shortage in certain areas. If there's, and the point of the whole exercise is if someone comes in and says, I'm going to put in $4 billion into a greenfields project, doesn't matter whether it's from China or anywhere else in the world, I want to put in $4 billion. But it's going to take 2 years to get it to shovel ready, right? I've got to spend millions before I get it to shovel ready. In 2 years' time, when I need all these skills, if they're not there, I'd like to know that I've pre-arranged 2 years before that I can negotiate to bring in under 457 legislation the appropriate skills. And that has been the common sense approach that I thought the Labor Party took in government. All we've done is taken those provisions and called it an investment facilitation agreement and put them into the free trade agreement. They are exactly the same safeguards and provisions, and it just means that they've got surety when they decide to make a huge investment, that whenever it gets to be shovel ready, could be years away. If they're short 100 welders and they can demonstrate at that stage, they're still got to demonstrate that there is a skill shortage. If they can demonstrate that, they're allowed to bring in from wherever, under 457s, for a limited period, welders or whatever that might be. Now, there is nothing exceptional about this. There is no change, absolutely no change. They'll be paid Australian wages. All of the conditions that were negotiated and put into effect by the Labor Party in the Parliament when they were in power are embodied in this investment facilitation agreement. And that's as it should be. But it will, because of that provision, give a level of surety to potential investors, which I think is reasonable, logical, and will greatly enhance their confidence about making very significant investments. Thanks again for the opportunity, and I'm very much happy to take some questions. Yes.
From the ABC. Isn't the time frame for the free trade deal with India a little ambitious, given the time that you said it's taken to negotiate with China?
Well, you know, when I got responsibility for the China negotiations, I hear all about the major progress made by others, but the agricultural offering from China was the same as it was in 2006. So China in particular was not very well advanced, frankly. And there has been an understanding between us, and we met early and said, you know, we both wanted something done by this end of year. And but we were really honest with one another about the size of the task, because there's 11,500 tariff lines. You know, someone, fortunately not me, has to go through every one of those and negotiate these things. And there's so many other, you know, because it covers IP, it covers industrial matters, it covers finance, highly complex. There's just a raft of, and you know, there's dozens of people with different expertise involved at different stages of negotiation. So we did it, and it doesn't get much bigger than China. And it was, you know, I would say 90% of the work has been done in the last 12 months. Once the sort of political will was clearly evident on both sides. And also, a lot in the last 6 months, because 6 months ago we sort of reached a point where it was almost a stalemate, because they had always been insisting on movements in the threshold from zero for state-owned enterprises. And I was saying, you've got these 4 products in what they call their untouchable, highly sensitive rice and sugar and cotton and grains. And I said, unless we have movement on that, I'm not going to move on state-owned enterprise. And we went around in circles like that for a couple of months. And my Chinese counterpart, who has now become a good friend, because I think we did act with mutual trust and develop mutual trust, he came back and said, we're prepared to put aside our demands on state-owned enterprises if you'll put aside. And I said, well, let's put them both on the shelf and have an agreement that in 3 years' time we revisit those, because we can't leave them. and he agreed, and from that point in time, we just galloped, and the teams galloped, and the series went on. So it is possible to answer your question, and and we were pragmatic, because there'll be some areas that it is a two-stage process, but really we weren't going to hold it back for 96 or 98% of the deal that was doable. We're going to hold back those things, even though they're important. And the other thing about, cotton, under the WTO provisions, we do get 880,000 tonnes in, which was worth 1.7 billion last year. For wheat, we got $256 million worth of wheat in last year. Sugar, we got 100,000 tonnes, 13,000 more than the US will allow in, worth 43 million. The only one that's missing out is rice, because the protocols, the phytosanitary things are not finished, but they're top of the list, so they'll start to see some action. So even in those areas, it's not as though we don't get access, we get very good access. We didn't see any improvement, unfortunately, but it'll come back in 3 years' time. Yeah. So India, I think, is quite doable if the political will see.
Yeah, no, it's the export.
Yes, sir.
First of all, congratulations. No, it's fine, thanks.
Oh, congratulations. I think you made us all very proud to be involved with trade. And I should say to you that the Special Economic Zone, I think, is already happening in Chatswood. Just a couple of questions, if I may. First of all, one of the issues that we've always found is that after free trade agreements are negotiated, and I speak particularly in reference to the US free trade agreement, there was great difficulty in getting the message out to the actual exporters and those people involved in investment, getting the message out for the benefits, because it's often quite complicated, and we need to simplify the message and get it to them that there are benefits there for them. And the second part of the question was, do you see now with these three FTAs in Japan, Korea, and China, extra resources being put into trade to allow us to really maximise the opportunity and the hard work that's been done by the government?
Yeah, well, we're trying to live within our means at the same time as we haven't cut anything in trade. I mean, trade and tourism, which is also my responsibility as Trade Minister, were the two areas because they are the growth sectors. Right? And so, whilst the rest of the bureaucracy suffered in many cases significant cuts, and you can see in the ABC and all that, everyone sharing the burden. And but in trade and tourism, there were no cuts, in fact marginal increases. So we're not going to let the opportunity go by, but I think the big responsibility, as you implied by your first question, is for the businesses to do their best. Now, I've been very conscious of what the history is about, especially SMEs not taking up these. Big business they've got the resources to burrow down and make the most of it, and they'll be well across these things almost now. Because there's a lot more information available to the department than we put out in the press releases and all that, and it's available, and it'll be extensively available once we've gone through the legal scrubbing and all that and get this thing signed and through our parliaments. But I'm very conscious of it. I've been working with ACCI and the state chambers. They're all, they've got all sorts of mechanisms already in place. I'm going to continue to take significant groups of business people from different sectors to the three countries throughout the next 2 years. And I won't be presumptuous about the next election, but throughout the next 2 years, as a means of consolidating and introducing, and we're also looking to have a portal, which is largely done, but it's got to be reach a point where I'd like a situation where if you've got a small metalwork business and you've got 9 metal workers, and you can just go in and enter metalwork and countries, and up will pop. What are the tariffs that face us? What face our opponents in your competitors in other countries? And what's the difference between the three ones who've done trade agreements, etc. So that all the information is readily easily available to SMEs. But the rest, I think the chambers, who are very well resourced and appropriately resourced. This has got to be a very high priority because this will drive very significant opportunities. And as I said in the speech, that there'll be a first mover advantage. I thought in many cases. And the second one, the resources. I'll fight for whatever I need. Whether I'm successful is not in my hands, but I'll do my best.
Thank you, Minister, for your presentation. You mentioned services. My name's Stephen Davies from AIP. We're a private education provider in Sydney.
Yes.
You mentioned services. Does that include education services?
It does.
Specifically, I'm thinking of the JSJ list for eligible providers.
Yes. All of that list will now be publicly available in China, and that drives a lot of the interest in, I think it's 77, don't hold me to that number, but I think there's 77 new educational organisations in Australia that will now be part of the formal listing in China, which drives really 99% of the decisions that students make. And there's a very significant skills focus as well. I think we've undercooked our export opportunities in skills. There'll be a big focus too, particularly in India.
And sorry, does that extend to private providers?
Yes.
Thank you.
Minister, thank you. My name's Anthony Bencher from Barton Deakin Government Relations. This has been obviously a great kick-off to this stage of your ministerial career. I was wondering if you could reflect on what you've learned in previous stages of your career, for example, representing farmers, that has perhaps assisted you to this great start.
Well, I suppose I was the executive director of the National Farmers Federation too long ago, I'm afraid, in the 80s. And the one lesson, I think, the key lesson that's driven a lot of my attitude, not just to this, but to a lot of other things, is that in democracies, because of the squeaky wheel, and the squeaky wheel is effective everywhere in life. If someone becomes a total pest, you end up focusing on that person. In families, in organisations, but especially with governments, because we've got an election every 3 or 4 years, the squeaky wheel diverts a lot of attention, especially in government, to our weaknesses. And I think quite an inordinate amount of government time and effort, public policy and money and all the rest is focused on our weaknesses as a country and the things that need to be improved. Now, I think if we, as individuals, spend most of our time honing up and developing the talents, particular talent. Everyone's got talents. Everyone's got something that puts them, ahead of lots of groups. If they hone up that talent, and they're the most, they achieve the most in life, and they're the happiest in life. It's no different for a country if we focus most of our attention on strengths. That started with my experience with the farmers. There's the top 30% produce 80%. They would make a killing anywhere. They're good business people. No one ever focused. You could never get attention on things that were holding them back. But the bottom 30% who were subsistence farmers and in their 70s and small, constrained by size of farm or management ability or both, and they got all the attention. And I thought, this is stupid. I mean, to have the resources to help the subsistence farmers either off their place or whatever it might be, to give them the safety, the best thing would be to focus on them on the top end and get them to be as successful and as profitable and paying the most tax that they can.
Bill Evans from Westpac. Minister, I would like to echo my congratulations for such a fantastic achievement. I think we can see today in the style of your presentations why you have been so successful. I've got two questions. The first one, have you done any modelling at all on what this might mean for GDP, either in the short term or the long term? And secondly, one of the challenges around infrastructure is not only stimulating demand and providing funding, but it's also stimulating supply. We've only really got two major suppliers of infrastructure.
Yes.
Does this agreement in any way help free up supply of infrastructure services?
Yeah, good questions. On the first one, I'm fixated on the supply. What was it? Just remind me on the first
On
one.
GDP.
Oh, the GDP. Sorry, yeah, the modelling. Well, this thing really it was just 3 days before the APEC, and when we came to a conclusion. So so I said a lot of the doors opened in the last month or two. So we've not been in a position to model it. Though the beef industry over the last few days have modelled, and they've got a sophisticated modelling that they've been carrying out for some time. They're saying that in the next 10 years, just for the beef industry alone, it's worth $11 billion to the GDP. So, given that there's dairy to elimination, goes to elimination, and the beef goes down over 9 years from tariffs of 25 to 40%. So it's a big effect, but things like seafoods, everything goes to elimination. Horticulture, everything goes to elimination, a lot of it very quickly. Sheep meats to elimination. As I said, dairy. So the big barley to elimination. There's the big industries, just in agriculture alone. So beef's 11 billion. And none of the modelling that's ever been done on these free trade agreements has taken into account the impact of services, because it's been most of the models can't capture a lot of the all the endless iterations of effect. And we're going to try this time because of the significance of the services package. So I think all the models out there, because all the ways this work is outsourced, they better sharpen their pencils, because we will get to that point, but we haven't got it at the moment. Now on the supply side, you talk about infrastructure. I've got to say, I was in Spain just a couple of months ago, and I knew there'd been a couple of major companies that arrived here. I mean, one was Port Layton's. But I think there's about 4 of them have arrived since the global financial crisis, because there's nothing going on in Spain. And the history to this, they got an unbelievable amount of hundreds of billions of euros when they joined the EU for infrastructure. And as a consequence, there's fast trains and tunnels and roadways, and the place is awash with infrastructure. There's just no demand for commodities and other things. So a lot of companies have looked further afield, and 4 of them have come here. If you look at the East-West Tunnel and other big projects that have reached a final tendering stage, there are these in all of the consortia. In fact, in the last 3, in the East-West Tunnel, I noticed, each consortia had one of these Spanish companies, and the 6 top Spanish countries on construction are in the top 10 in the world because of that particular fact. Right? So, and you can already see the duopoly that existed here. We're going to benefit with all this the next $125 billion worth of infrastructure projects that we've got on the table. That we will benefit enormously as a community because of that competition. It's coming in, and there's an Italian firm or 2 and a French firm that I met with yesterday. They're all coming over. So I do think the fact that, and this is the message from an investment point of view, I'm trying to take to a lot of these companies. I met we had a round table yesterday with all the French CEOs that came with the president. And this was the message that we've got a window. We've got a first mover advantage. We need your capital for all sorts of industries, and many of them already here, been here a long time. But we need more of your capital because we need the innovation, we need the expertise, we need the competition. All of these things will sharpen us up to a point where we can take maximum advantage of what is emerging. This phenomena that is emerging of 600 million people going to 3 billion in the middle class and we're in the centre of it, same time zone, right? All of that, all those sort of geographical advantages, plus we're a very knowledge-based economy. But we do need the competition, and I think the supply response is going to come in a significant way, and it'll be a great advantage to us.
Minister, I've been informed that sadly we're out of time, so we don't have the opportunity for any further questions. But if I can just thank you very much for joining us today. You've given us a fascinating insight into the negotiations that you've pulled across the line this year. We really, really do appreciate the time that you've spent